Hey guys, it's Nick, and in this video I want to talk about what's going on in the stock market today, particularly in the NASDAQ and the FANG stocks, with Amazon going below 3,000 today. Is this a sign of the air coming out of the tech stocks and FANG stocks and all these speculative stocks, or is it just a blip in the road? Well, today the NASDAQ fell below the 50-day moving average as well, which is significant. So I'm going to look at some of these charts, some long-term charts and short-term charts, and look at what's going on in the market and see what the trend is. So it's about 3:15 in the afternoon, 45 minutes before the close, and these are the FANG stocks: Facebook, Amazon, Apple, Netflix, Google, and I added Tesla as well. And so these are kind of the bellwether for what's going on in the NASDAQ. And if you see that almost the whole day, they've just all been trending down, trending down, trending down. And now there's, a slight attempt at a bit of a bump, but even that is being sold as we speak. And Amazon traded here at $2,995, so under $3,000. So is that significant? Well, let's take a look at some longer term charts to get an idea of what's going on here. So I like to look at a monthly chart going back a decade to kind of see a big picture of what's going on. And starting with Facebook, you see that, okay, they had a great run up from, the lockdowns and all of that stuff. But in the last 1, 2, 3, 4, 5, 6 months or so, 7 months, they've basically been going nowhere except kind of trending down. And so these candlesticks that they have these wicks up, meaning they made these highs but closed lower. And this kind of arch with this kind of candlestick pattern, some people call it rising in agony, meaning it's trying to rise, but it's in agony because it keeps failing and it keeps falling lower and lower and lower. And so it's kind of a circular kind of top. So is Facebook the only one that has this kind of pattern? Let's see. Amazon also has a little bit of this pattern as well. I mean, it's gone straight up from the bottom here, but in the last 6-7 months, it's basically been doing nothing. And it had this high close to 3,600, and it hasn't reached anywhere near that on a monthly close. It's been trying with these little wicks going up here, but they keep closing, lower, not close to the highs that it reached during that month. And now it's been drifting lower, and today it broke the psychological $3,000 a share level. So there's a lot of air between here and the 50-month moving exponential average here. So when you see these big stocks that are the pillars of the NASDAQ or the market, or tech stocks or whatever, when they start struggling, then the more smaller speculative stocks really struggle, because the thinking is that if you have a large amount of your money in these FANG stocks, or the hedge funds have a large amount in these FANG stocks, when they start faltering, they might sell these last and sell the speculative stuff first. And so if Amazon is already having problems holding $3,000, what is that going to mean for these smaller speculative stocks that people are jumping into to try to get 20, 30, 40% in a month or something like that? Looking at Apple, it's a little bit of the same thing. Had a dip here, made a new high, but that high didn't hold for the month, and it ended up down here. And it's just last month was a down candle. And so here it's kind of in the middle. But again, there's a lot of air here between the exponential moving average and where it is now. Not that strong. The Netflix monthly chart looks stronger than the other FANG stocks, really. It's kind of in a holding pattern, but it's at the top end of the range. So it's not doing too bad compared to, say, Amazon or Apple or Facebook. And Google seems to be the best out of all of them because it's almost at all-time highs, and it hasn't had a down candle in 3 months. So it's acting very strong. It's probably the strongest out of all the FANGs. The monthly chart in Tesla definitely looks like it's rising in agony. I mean, at the beginning of the year here, it started out at 700, went as high as 900, and closed below 800. Next month, it opened here above 800, traded almost to 900, but closed like 670. And now this thing traded above 850 and is now back down to 675. So, you know, it's not making higher highs, it's making lower highs and lower lows. And it looks like the next move down is to something in the 500s, which at that point is really going to be a wake-up call for a lot of people that are permanent Tesla bulls and think that it's going to go up no matter what forever. And Zero Hedge talks about it in this article that the NASDAQ has broken below its 50-day moving average, which obviously is not a good sign. So these charts indicate that there is some cracks in the tech stocks, in the FANG stocks going on here. And I'll tell you what, another big indicator is that the passing of this stimulus made the market go up and all this stuff, and that was short-lived. And if you ask anybody what's going to happen to stocks long-term, they all say, well, because of all the stimulus, we're going to have a lot of inflation, so stocks are going to be the thing to own. And so that's kind of the common thinking on Wall Street. Usually what they say is the market does what hurts the most amount of people. So if everybody's thinking this, maybe it's time for the market to take a pretty big dip and get a lot of people caught surprised here. Now, I'm not saying you should go out and short the QQQ or NASDAQ futures or Amazon, or that Amazon is going to 2,000 tomorrow or something like that. But keep an eye on these FANG stocks, because when they get weak, the more speculative stuff gets really weak. So if you are in some of these things, have pretty good gains in them, you might want to think about putting in a stop loss, or maybe, you know, lightening up on some of your positions for the potential of lower prices ahead. So guys, I hope you like this video, and let me know if you think Amazon will end the week below 3,000. Thanks for watching, guys. I'll see you in the next one.